Hello traders. Today is the 2nd of January 2010, and happy Sunday to you all, and a happy New Year to you all. Today I want to talk to you about the CCI indicator, how you can use the CCI indicator like a professional trader. Okay, on this chart here below the chart, I have the CCI period 24. Okay, and you can see here the red line within the Bollinger Band is the moving exponential moving average 24. And also I have here the Bollinger Band 24 volatility 2. Okay, so Bollinger Band period 24 volatility 2, exponential moving average 24, and the CCI 24. Okay, the first thing that you need to remember, if you are using the CCI 24, you are trying to compare the price to the moving average, to the exponential moving average 24. Okay, if you are using the CCI 50, you are comparing the CCI 50 to, you are comparing the price in fact to the moving average 50. If you are using the CCI 200, you are comparing the price to the moving average 200. Okay, if you are using a CCI 14 that many traders are using, you are in fact comparing the CCI 14 to the moving average 14. And sometimes you'll see other traders using the CCI 6. In fact, if you are using CCI 6, you are comparing the price to the moving average 6. Okay, I will show you clearly what is happening. When you see here the CCI 24 above 100, where I'm moving my cursor here, in most cases you will see also the price above the Bollinger Band, above the upper bound of the Bollinger Band 24 volatility 2. And when you see the CCI 24 below minus 100, you will also notice that in most cases the price will be below the lower bound of the Bollinger Band 24. Okay, if you are using the CCI 14, when the CCI 14 is above 100, in most cases you will notice also that the price will be above the upper bound of the Bollinger Band 14 volatility 2. And when you are using the CCI 14 and the price is below minus 100, in most cases you will also notice that the price will be below the lower bound of the Bollinger Band 14 volatility 2. And if you are using CCI 20, okay, and the CCI 20 is above 100, in most cases the price also will be above the upper bound of the Bollinger Band 20. And when the CCI 20 is below minus 100, you will also notice that in most cases the price will be below the lower bound of the Bollinger Band 20 volatility 2. So in fact the CCI is another Bollinger Band indicator. Okay, but there is some advantage for using the CCI indicator because it got some leading pattern in it. Okay, but first I will talk about the two main divergence. Okay, I want to talk about the primary divergence that you can use the CCI for. When a price display a high followed by a higher high, as we have here, a high followed by a higher high, but the CCI display a high followed by a lower high, that's a bearish divergence. So the CCI display a lower high. When the price display a higher high, that's a bearish divergence. The price must rectify itself, returning to the fair value, which is the exponential moving average 24. Because we are using the CCI 24, there is a divergence between the CCI 24 and the price. The price has a tendency in that particular case to return nicely back to the exponential moving average 24, as it happened here. There is a bearish divergence. CCI display lower high, price display higher high. The price has a tendency to return to the fair value, which is the exponential moving at 24. It returns nicely now to retest it nicely to correct itself. The market is considered a bit oversold. When there is a negative divergence or a bearish divergence, the market must rectify itself. No, a divergence does not mean that the price will reverse, but the price will rectify itself because there is something like imperfection in the market. The market will rectify itself. That's what has happened here. A negative divergence, a bearish divergence, the price return to the fair value, which is the exponential moving at 24 right there. You will also notice a bullish divergence. That's how you use the CCI in your trading. Here you will see that the CCI will display a low followed by a higher low, okay? A low followed by a higher low, but the price in that particular time display a low followed by a lower low, okay? There is a positive divergence, which is a bullish divergence. So the CCI displaying higher low and the price displaying lower low. This is a positive divergence or a bullish divergence. In that particular case, the price might return to a fair value or continue the movement to the upside. Okay, it's telling that there is an increase in a bullish momentum. Therefore, the price must rise to the fair value, even go above the fair value. Okay, this is what we have here: a low followed by a higher low by the CCI 24. The price display a low followed by a lower low. The price return to the lower value, to the fair value. Okay, which is exponential movement 24, because we are using the CCI 24 in this particular case. There was a bit of consolidation here, and there was increasing momentum. The price continued the movement to the upside to retest the upper bound of the Bollinger Band 24. This is a typical bullish divergence, which is indicating to us an increase in the bullish momentum. Okay, another way that you can use the CCI indicator, this is a very beautiful way to use it. You must pay attention carefully here. You will notice sometime that the CCI will move away from the zero line. Okay, the zero line represents in this case the exponential movement at 24. Okay, anytime you are looking at the zero line, here is representing the exponential movement at 24, because we are using the CCI 24. If you are using the CCI 12 or 14, if you are using, for instance, CCI 14, the zero line represents the moving average 14. Okay, if you are using CCI 50, the zero line in that particular case will represent the moving average 50. If you are using the CCI 200, the zero line in that particular case of that particular CCI will represent the moving average 200. But because right here I'm using the CCI 24, the zero line in this particular case represent the exponential moving average 24. That's what we have right here, you see. So sometimes while I want you to pay attention to, you will see the CCI move away first from the zero line. Okay, is moving away first from the zero line, and when you see it returning back to the zero line, the CCI move away first from the zero line, now is returning back to the zero line. But when the CCI was returning back to the zero line, the price is still on the upper bound of the Bollinger Band 24. We know that the price has a tendency also to follow the CCI by returning also to the exponential movement 24. So we have what we call a leading pattern on this CCI indicator. So the CCI was the first returning to the zero line, telling us that the price very soon will also return to the exponential movement 24. We will wait for the trend line to be broken and we take advantage of that. So the CCI in fact in this particular case is telling us something before the price. It's telling us that soon the price will have a tendency, have a high probability to return to the exponential moving average 24. Once the CCI has come near the zero line, the price also at that particular time is returning nicely to the exponential moving average 24. Sometime also you will see it again right here if you follow my cursor. The CCI went below the minus 100. It went below the minus 100 level, and then was started returning. Okay, was returning back to the zero line. So first you will see the CCI moving away. First it moved away from the zero line by going below the minus 100. Okay, now it's returning back to the zero line, but the price at that particular time where the CCI was still returning back to the zero line, the price was still near the lower bound of the Bollinger Band 24. Because we are using the Bollinger Band 24, we know that soon the price also must return back to the exponential movement 24, and exactly that's what we've seen on this chart. So there is a leading pattern on this indicator, which is the CCI indicator. Okay, so the main thing that you have to remember that there is a perfect similarity between the CCI indicator and the Bollinger Band. And the best way to use the CCI indicator is to use the two main diversions, okay, where the CCI is displaying a lower high and the price is displaying a higher low. When you are selling, you know you have to wait for the trend line to be broken. When you are selling, you know that the first target is the exponential moving at 24. If you are using the CCI 24, the first target will be the exponential moving 24, okay, and the price may continue the movement to the downside depending on how strong is the bearish pressure. Okay, the TSTW 24 trading system has a tool that will allow you how strong the trend is. This is the advantage of using the TST W24 trading system. And in this particular case, when the CCI was returning near the zero line, it's telling us soon there's a high probability that the price also will return to the exponential movement 24. So this is how you will use the CCI indicator in order to cream the market consistently. If you want to join us and also become a TSTW24 trader, you need to go to www.stochastic-macd.com www.stochastic-macd.com. I need to mention in this video that the TSTW24 trading system does not use the CCI indicator at all. Until the next time, enjoy yourself and be very happy. Speak to you soon.